Hi everyone, welcome to week 3 practice exercises. The material that we covered over the past 2 weeks straddles concepts in both financial and managerial accounting. So this week we're going to focus on managerial accounting. We'll talk about the role and uses of managerial accounting, the nature of manufacturing, direct and indirect costs, manufacturing costs, and manufacturing financial statements. The chapter is also going to address the management process, and that includes planning, directing, controlling, improving, and decision making. The management process is used virtually everywhere in every industry, function, business, and so on. So it's really something that you can begin implementing immediately. Now let's talk about what's in the video. During this video, we're going to classify costs as either a product or a periodic cost. And then we're going to further classify those costs as either direct materials, direct labor, factory overhead, or expenses. At the very end of this, we're going to complete a statement of goods manufactured, and then we're going to calculate prime and conversion costs. So let's go ahead and get started. In the table that you can see, you can tell that we have divided the table up into 3 sections. You have your activity first, and of course the cost associated with it. And then we have a section for product costs and period costs. Product costs are further subdivided into either direct materials, direct labor, or factory overhead. Direct materials are the materials that we can directly trace to an end product. Direct labor, very similar, is something that we can trace from a labor pool directly to a particular end product. And then factory overhead are those costs that really should be applied to the end product, but maybe it's not cost effective to trace it directly, or maybe there's no way to trace it directly. And so we lump it into factory overhead. Product costs end up on our financial sheets as inventory or inventory in process, right? If once we sell the product, it shows up on those financials as cost of goods sold. Period cost is a little different. Period costs are they're composed of selling expenses and administrative expenses. And these are the expenses that show up at the end of every period, whether it's a month or whether it's a year. So whether or not we sell a product, we're still going to recognize selling and administrative expenses in the month that they occur. Okay. So now that we know how this is set up, let's go ahead through some of these activities. And we do have quite a bit. It goes from A to Z, so that's quite a bit to cover. We're just going to do a sampling and get a good feel for how to classify costs. Let's go ahead and start up at the top. So the salary of a chief compliance officer of a company. Well, we can definitely say it's not a direct material. We can say that it's not a selling expense because they're not selling anything, right? So these two are out of the mix. I'm just going to put an X here, and I'm going to put an X here. But now we're into, is it direct labor, factory overhead, or administrative expenses? Since this is the chief compliance officer for the entire company, and we're going to assume that this company produces more than just one product, then it's probably not direct labor. Now we're down to 2. It could be factory overhead or it could be administrative expenses. But because this compliance officer is his job or her job is to ensure compliance across many different areas, we're going to go ahead and say that this is an administrative expense. And so I'm going to take that administrative expense and put it, or I'm going to take that cost and put it in administrative expense. Let's go on to the second one, power used by painting equipment. So we know that that's not a direct material. And when we're talking about power, we're talking about electricity. So it's not a direct labor. I'm going to say that that's probably a factory overhead because we are painting the the aircraft. And let me say, I forgot to tell you what kind of company this is. This is a company that produces aircraft. So the power used or the electricity used by the painting equipment would actually be in our factory overhead. So I'm going to go ahead and grab that 14. Now let's look at the instrument panel that we install in the aircraft cockpit. Now that's actually going into the end product. So that's pretty easy to determine that that's a direct material. So I'm going to grab the direct materials. How about the annual bonus paid to the chief operating officer of the company? Yep, you kind of guessed it. It's very similar to the compliance officer. So that's going to be an administrative expense. How about the turbocharged airplane engine? Yep, it's just like the instrument panel. So I'm going to go ahead and pick up the turbocharged. Now let's skip down just a little bit and let's look at the hourly wages of employees that assemble the airplane. Now we've been talking about direct materials and factory overhead and administrative expenses. So this really doesn't fit into any of those categories. This is really that direct labor because it's the hourly wages of the employee who is actually assembling the aircraft. So I'm going to put that $750 in direct labor. All right. So let's go down to the very next one. How about the salary of the marketing department? Well, we know that's not direct materials. It's not direct labor. It could be factory overhead. But selling expenses really feels like where it should sit, right? Because this is the marketing department. They're the one incurring the cost to sell it to the customer, right? So I'm going to go ahead and pick up that cost. And so when you're walking through and deciding what type of cost you're dealing with, that's the thought process that you would walk through. Is the cost directly related to a product, or is it kind of related to the product, but I can't directly trace it, and that's where you get your factory overhead? If it's none of these, then we want to look at our period costs. It's either going to be a selling expense or an administrative expense. Now I wanted to have something in each one of these blocks so that we could look down at the bottom. And so I wanted to talk about calculating everything by your cost or by your category. So with this one, you can see that my total cost for direct materials, if I had filled it out, it would be a totally different number. But at this point, it's $623,000, and it's picking up these two numbers, right? So we get to see at the very bottom how much our direct material cost is, our direct labor, our overhead, our selling expenses, and our administrative expenses. We get to further divide this by our total product or period costs. Now remember, this is the cost. The product cost is what will end up on the inventory or our cost of goods sold. The period costs are what will be reported as expenses for the month in which they were incurred. All right, so let's go on to the next piece, which is completing that statement of cost of goods manufactured. So for this company, we are working with Greystone Company. We're looking at information that occurred over the course of a month. They've provided their inventory information. This is the level of materials at the beginning of March, and this is the level of materials at the end of March. This is the work in process at the beginning of March and the work in process at the end of March. Our finished goods are listed here too, again for the beginning of March and the end of March. We were also given some information regarding direct labor, all of the materials that we purchased during the month of March, and then all of the factory overhead that we incurred during the month of March. So we're going to take all of this information and we're going to put it into our statement of cost of goods manufactured. And you can actually see that I've already populated this, but let's walk through the thought process. So the statement of goods manufactured, we're always going to start with our work in process. I'm sorry, the inventory in process as of the first day of the reporting period. So basically, this would be if your employees came in and they went to their workstations, they would see that there is about $410,000, almost $411,000 worth of inventory that's in process. And I got this number from the information provided, and you can see that right here. This is the work in process for March 1st. So that's that's the value of the work in process when your employees walk in on March 1st. Then we want to look at our direct materials. We know that we started the beginning inventory with 198. And again, we know that because that was the information that was provided to us. These are the materials that are sitting in the warehouse waiting for us to change them into a finished product. We want to add in our purchases. So we know that our purchases were 2.5 million, again, because we were told that. And so we want to calculate the materials available for use. And it's our beginning inventory plus any of the purchases that we made. So throughout the month of March, we had $2.7 million of materials available for us to convert it into a finished product. Now we want to go in on March 31st and we want to conduct an inventory of direct materials. And that's where someone would go into the warehouse, they do their count, they would calculate it out based on how much each one of those pieces of material cost to purchase. And our ending balance is 182. So then we can subtract that out. And our cost of direct materials used in production were $2.5 million. Now, we were told what our direct labor was, but again, there's someone who is watching how many hours people work on each particular job. Again, 3.3 million, we were told that up here in direct materials. And then we want to look at our factory overhead. And our factory overhead, we were provided all of that information above. And one thing I forgot to do is I forgot to push this in just a little bit. I have the option in my ribbon to slide this in just a little bit so that we can see that the factory overhead is composed of these items. So my indirect material, machinery depreciation, heat, light, power, supplies, property taxes, and miscellaneous costs are all captured down here. And you can see that we just have to sum that up as our total factory overhead. So for the month of March, this is the total amount that we paid for our factory overhead. I can't trace the electricity to one particular product, but I can capture the full bill that I received from the SoCal Edison, and then I can apply it across the different products. Same thing with property taxes and our supplies. All right, then we go on to our next piece, which is we want to total up the manufacturing cost incurred during the year. So that is going to take the cost of direct materials used in our production up here, our direct labor, plus the overhead. So if you wanted to be a little more succinct, that would be our direct materials plus our direct labor plus our overhead. We want to look at our total manufacturing costs, and that's where we want to bring in the work in process in inventory. Remember, our direct materials over here, we were looking at We were looking at what was in the warehouse. It was just waiting for us to transform it into an end product. But this number up here, this is where we began to transform those direct materials, but we hadn't finished it yet. So the total manufacturing cost must include not only what we've incurred during the month, but also what was almost finished at the end of February. And that's where we get those two numbers. Then we also want to subtract out anything that we didn't finish. And I say December, but let me change that to March real quick. There we go. And the ending work in process was 481. So we want to take that out of the whole mix. So now our cost of goods manufactured is $6.5 million. So I've created my statement of goods manufactured. Now we have one thing left. We need to calculate the prime cost, the conversion costs, and we're also going to calculate the product costs. Let me blow this up just a little bit so that we can see. When we talk about prime costs, we're looking at just the direct materials plus the direct labor. Those are the prime costs. And these are the prime costs for that one product, right? I can trace everything. My conversion costs are looking at my direct labor and my factory overhead. And what I'm trying to answer with conversion cost is how much did it cost to transform or to convert direct materials into an end product? Whenever, whenever you are performing any calculations, you want to make sure that you don't add prime cost plus conversion cost. And the reason that you wouldn't want to do that is that you see that direct labor is accounted for in both of these costs. All right, so let's go ahead and perform the calculation. First of all, how much are prime costs? Let me scroll up. So our prime costs, again, are going to be our direct materials plus our direct labor. And we can see that here we have our direct materials plus our direct labor. If we wanted to look at our conversion costs, that is the direct labor plus the factory overhead. And our final calculation is the product costs, and that is your direct materials, your direct labor, and your factory overhead. Those are the product costs. All right. Thank you so much for joining me, and I'll see you in the next video.